Hey there, my name's Curtis Lucas and you're watching Empire Building. I thought I'd do a quick video while I'm running around in the truck working on the Empire. Quick summary over the events of the last week. What a week it has been. We've been just in a wild tailspin of a ride, up and down. The market doesn't seem to know which way it wants to go. Obviously, yeah, we got the news from the Fed, which at first looked like it was going to be positively received, but we quickly got rejected down to basically retest the bottoms of the, at least as far as the broader market was concerned. My thoughts on that are, I said before the announcement that the market likes certainty. It does not like uncertainty. And unfortunately, after hearing from Jerome Powell, what we got was more uncertainty. We still don't know how many rate hikes there are going to be in 2022. So again, I think that the market is pricing in the worst case scenario. And that appears to have been the case. Before the announcement, the consensus seemed to be that we'd be looking at 4 rate hikes. And now they're thinking 5 rate hikes, when Jerome Powell basically only confirmed 1 in March. And then they say they'll assess at that time what they want to do after that. So hard to say what we're going to expect over the next couple of months between now and that March Fed meeting. But Apple earnings call came to save the day yesterday after the market closed. A record quarter. So obviously, yeah, there is still growth happening in this market. Despite all of the issues surrounding supply constraints and all of that nonsense, it's making difficult for a lot of companies to meet the demand that's clearly still out there. So it's yeah, these are definitely uncertain times, and despite even like Tesla as a prime example, this is what I was concerned might happen to Apple. It had a record quarter as well, was up after market, and then immediately sold off hard as soon as the market opened yesterday. I was somewhat fearful that was, and it did appear that was going to repeat itself today, but it reversed. It is a choppy market right now, but it is pretty common as far as from technicals are concerned when markets have such violent drops as we've been through. The bottom is not a quick and sharp bounce and then straight on to recovery. It is very choppy. It tends to violently move up and down for a period of time. So we've been doing this for a week now. So I guess next week will be the big answer to our questions as far as what is going to happen, at least over the next few weeks. A lot of people are eyeing up that $30,000 Bitcoin. Again, just because we tend to find that just the number that everybody's expecting to see is the number that we probably don't reach. Not to say that it can't happen, but I'm still I'm not counting on that. We're sitting pretty comfortably at about 37,000 as we speak, and we'll just have to wait and see. Despite all of the violent sell-offs, Bitcoin has actually held up better than the markets as far as maintaining its level relative to the bottom that we formed on Monday. $33,000 does represent the highest volume price that Bitcoin had been purchased at throughout this entire bear market. So that does make perfect sense to me that it could serve as our ultimate level of support. But again, we really don't know what's going to happen next. We are in a situation with high inflation, that will be sustained for some time, but the market still has to absorb all of this, and it's definitely looking for signals from other companies and other earnings to give us an idea of what the growth expectations might be, despite these other policy decisions that are being made or yet to be made. It's very uncertain, and I think that is reflected in the volatility that we're witnessing these days. But I will say this again, more so in the broader markets like the NASDAQ in general than we have seen in Bitcoin. I've been quite impressed by how well Bitcoin has held up during all of this. The mining stocks, however, as we know, don't follow Bitcoin. They follow the stock. They follow the NASDAQ due to the fact that, as I mentioned, the algorithms that are trading these stocks are the same algorithms trading the rest of the broader market. And we've seen evidence of that again today, with Apple being up, and Apple being the largest company in the U.S. stock market. It's amazing to me that Apple, being one company, has a total market cap of about $2.75 trillion. The cryptocurrency total market cap of all cryptocurrencies combined is approximately 1.6 trillion. The entire cryptocurrency market cap never even surpassed that of Apple. So if anyone's wondering if this is an entirely new disruptive sector that's being developed right in front of us. So if anyone thinks that this is still too late or this is a bubble, I still don't see it. But obviously, yeah, we have to suffer these volatile conditions and these significant drawdowns. But I'm still pretty confident. The fact that we are still, we're looking at a $37,000 price on Bitcoin, and the market is in extreme fear. Just think about all the times throughout Bitcoin's history that we've seen these kinds of drawdowns. And the prices that we fall down to are the same prices that people were calling a bubble not so long ago. So that perspective does affect things. It does affect people's behavior. But the reality is the fundamental nature of what we're a part of, nothing's changed. I enjoyed the latest interview from Fred Thiel and Ryan over on his channel. And something I've been looking at myself that Fred brought up was that people don't really consider the monetary value of the Bitcoin miners that these companies have purchased. Mara in particular, sitting on 200,000 miners that are currently on order. You take the actual market value of all of those miners, and it's pretty darn close to their existing market cap. That's not counting the cash they have on hand, not counting the Bitcoin they have on hand, or any of their future profits. Now, having said that, you do have to account for the debt that they took on that comes out of that. But still, these companies are approaching pretty darn close to book value, in my opinion. But I haven't done the math on that. Maybe I'll do a video in the near future, try to get a read on what that might actually look like if we were to actually value their assets fairly in terms of the market price. You have to also bear in mind that these are depreciating assets, so it's not like they're going to retain that value over 5 years. I mean, most of them are going to be depreciating them to zero within 5 years. So you do have to consider that when evaluating them as far as those assets are concerned. But what I would argue is that during that time, while they're being depreciated, they will return far more than that value in Bitcoin over that time. So I would argue that value that they currently have is more than sufficient when you forecast that over the time period that they're depreciated in. I mean, this is all just accounting principles, but you can start to understand in terms of what the value proposition is of these miners at right now. But the market is not concerned with that right now. The market is only concerned with managing risk and the algorithms basically playing arbitrage. That's why everything moves with Apple right now. These algorithms are programmed to respond to changes in the price on the NASDAQ. So whether we like it or not, fundamentals only matter in the long term. In the short term, we are chained to this. And whatever happens in that broader market, we're just going to have to deal with it. So yes, these prices could drop significantly further should the markets decide to continue bleeding for whatever reason. But if you're prepared to sit through this, there is significant opportunity to be had. It just requires a longer term consideration. As far as I'm concerned, Bitcoin miners that have reached scale, and this is important, Bitcoin miners that have achieved that level of scale are far better suited to survive a bear market. Because the worst case scenario is, so long as they are profitable, which they always will be, because they are competing in an open market. And within that market, they have the lowest cost to produce. So no matter what happens to the price of Bitcoin, it can drop as far as it wants to. These miners will always be profitable. So in the worst case, all they would need to do is sell a portion of what they mine to cover their operational costs. And they also have their hodl position of Bitcoin that if they needed to, they could just borrow against it. No different than Hut did in the last bear market. So yeah, this is a very secure business model. But like I said, it's important that the miners have to have reached scale and already secured the necessary capital to complete their build-out plan. So as always, timing is everything in these markets. But just as we've heard many times before, as investors, time in the market is better than timing the market. That's all for this one. Now let's get back to empire building.